Welcome to Alpha Insights. I'm Juniper. Today we're diving into Globant and what the recent pullback means for investors. With me is Tom, market commentator. Hey Tom, great to have you. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Juniper. Good to be here. Globant's been one of those names that moved from a flashy high to much lower levels, and there's a lot to unpack.
Interesting.
So the real question here is whether the drop is a valuation opportunity or a warning sign. The stock's trading around $38.30 after hitting a little over $105 earlier in the cycle.
That's a big move. Walk me through the fundamentals first. What's the company actually doing now?
Globant is a digital engineering and consulting firm. They build custom software, run industry-focused AI studios, and offer cloud and product engineering work for big enterprise clients across finance, media, healthcare, retail, and gaming. They lean into AI and platformization to make revenue stickier.
And financially?
Revenue on a trailing basis is about $2.45 billion, and recent quarterly revenue was roughly $607 million. Trailing net income sits near $109 million. So they're generating cash. Levered free cash flow was cited around $268 million on the trailing basis.
Right.
But margins are a key caveat. Net profit margin is only about 4.5%, and return on equity is low, roughly 5%. They also missed first quarter EPS by a hair, about $1.50 reported versus roughly $1.52 consensus. So that sensitivity to utilization and margins shows up quickly in earnings.
That kind of volatility in margins can spook investors.
Exactly. The balance sheet is okay for a services firm. Cash around $200.5 million. Debt is modest, with debt to equity near 21%, and current ratio about 1.82. So liquidity and leverage don't look like the immediate worry. Execution and margins are.
Okay, so valuation. It looks cheap on some metrics, right?
Cheap is the right word in multiples. Price to sales is down near 0.72, and some forward P/E readings are in the low single digits. Analysts' mean price target is around $61.39, which implies a lot of upside from current levels, but those targets are all over the map.
Interesting.
Yeah, that's a good point. There's a polarized analyst mix, some firms still bullish, others more cautious. A handful trim targets in May, pushing some to the high 30s or low 40s, while the high end stretches much higher.
So what's the bull case in plain terms?
If Globant can successfully monetize its AI industry studios and convert more work into recurring platform-like revenue, that would improve revenue stickiness. Couple that with better utilization and pricing power, and margins could expand. If that happens, multiples could re-rate back toward historical norms, and free cash flow would support a higher valuation.
And the bear case?
The bear case is execution misses and slow AI monetization. If utilization stays soft or pricing gets squeezed by larger competitors, margins stay thin. And remember, enterprise IT budgets are cyclical, so a macro slowdown would hurt discretionary transformation spending. On catalysts to watch. The next earnings season will be crucial. Analysts will be listening for margin guidance, utilization trends, and any tangible client wins tied to the AI studios. Also watch analyst revisions and whether volume patterns show a real technical rebound. A sustained move above key levels could matter for traders.
Quick reactions. What should long-term investors focus on versus short-term traders?
Long-term folks should monitor sequential margin improvement, bookings, and evidence that AI studios are driving recurring revenues before leaning in more. Short-term traders will want to see technical confirmation, like sustained moves above resistance levels with improving volume, and react to guidance beats or misses.
Got it. Any final thoughts on risk management?
Position sizing matters here because the stock has had wide swings. Cheap multiples alone aren't a buy signal. Cheap can stay cheap if execution stumbles. So manage exposure and use stop levels if you're trading this name.
Okay, Tom, let's wrap with 3 key takeaways for listeners.
Sure. 1. Globant trades at depressed multiples, which could offer a valuation cushion if execution improves. 2. The primary risks are margin pressure and slow monetization of AI initiatives. Those are what will decide the story. 3. Watch upcoming earnings and booking trends closely. Those data points will drive the next big move.
Thanks, Tom. And for our listeners, if you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai.